Good afternoon, Wealth Our Way Nation. What is going on? It is your man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I want to thank each and every one of you who are joining me for episode 65, the difference between term and permanent insurance. First and foremost, before we get into this, I want to show love to everyone who is joining me live here as I stream across the Wealth Our Way Facebook and YouTube platforms. Give that special salute to the Wealth Our Way Nation members who watch this program pre-recorded overnight, over the weekend, on the lunch break, while they in the other room ducking their spouse, wherever they can squeeze 15 minutes of financial literacy in. And then lastly, the heartfelt how are you to my Life 101 platform members who listen to the audio of this here program. So thank God it's Friday, as they say. But for me, the world don't stop. I got to keep on, as my man Jigga once said. And it goes 7 days a week here at Wealth Our Way. What I would like to say is this week wraps up all things life insurance on a high level. Let the cat out the bag and let you know that the October webinar is going to be a 90-minute, 3-part dive into all things insurance. You do not want to miss this webinar. I am here to tell you, so the vast majority of everything that I give out here is free. The webinar is going to be a couple of dollars. When I tell you, I haven't figured out a price yet, but when I tell you for all 3 parts, it'll be something very, very nominal. You guys know how I do it. Under $30, maybe $7 a session. I don't even know yet. My staff is working on that. But when I tell you I've worked in the life insurance industry and I still consult and review life insurance every day for clients, and the information you are going to hear at the webinar will save you hundreds to thousands of dollars when it comes to purchasing life insurance. As I tell you all the time, I'm a broken record. I'm consistent. You can hear the same thing no matter how far you go back in my messaging. There is nothing wrong with whole life insurance, variable universal life insurance, index universal life insurance, term insurance. Nothing wrong with anything. I don't believe there are bad financial products. What there are bad financial marriages. What there is bad information being purveyed to the masses by people with nefarious intentions. So what you need to do is find a source, whether it's Big Tank at Wealth Our Way or someone else who can give you objective, unbiased information on how these financial products work. It is worth your time. It is worth the small nominal investment that you may pay me or someone else to not be got for tens of thousands of dollars. I am undoing every day. Somebody calls me, emails me, brings on some information to me, hires me to undo some drama that they got themselves into. I just brought a client on not too long ago who was sold an insurance product that doesn't meet their needs at all. The surrender charge is $3,000. And for $40, they could have learned not to buy that crap. But you will do what you wish, but I'm always going to be here providing you the lowdown, good news from your friend in the industry, Charles Tank Harris. With that being said, today we're going to talk about the differences in term insurance and permanent insurance. I don't say term versus whole life, which most people say. In fact, I'm going to share with you today some information from Investopedia, and their article is entitled Term versus Whole Life. The reason I don't make that narrow distinction is there's more on the permanent side than just whole life. There are a bunch of different products on that permanent side. There is universal life and all of its variations. There is whole life and all of its variations. So it's very important to understand these different levels. I can't go into it all in 15 minutes of finance, but I do go into it all in the webinar to see what's best for you. What is term life insurance? Term life insurance is life insurance that pays a straight death benefit. Someone dies, that's the peril. Money gets paid out to the beneficiary. Very simple concept. The term part of that is how long the premium that you are required to pay will stay fixed. That's what term insurance means. I had to learn that myself. And I was a financial service professional for the better part of, I think, 16 years when I realized that term insurance didn't mean when I got to the end of the term that was quoted, my insurance went away. Give you an example. In 2003, I bought a 5 million, or I think it was $3 or $5 million Prudential life insurance 10-year term life insurance product. Best decision I made. Some people think buying term insurance is a waste of money. You don't die, you paid money for nothing. For me, I wasn't buying this death benefit. I was buying peace of mind. I had very young children at that point in time. I was on an airplane 4 days a week. I'm scared of flying. I was petrified. I was the sole income earner. I had a stay-at-home wife who made no money outside the home. If I died, my kids were going to be completely destitute. My ex-wife might have had to start doing some crazy stuff to feed the kids. I don't even want to know. My kids would have been able to stay in the house, the neighborhood, nothing. So getting that insurance policy put my mind at ease when I purchased it. Not knowing what I know today, I bought this 10-year policy and I assumed that 10 years later, the policy went away. And that wasn't true. I learned that. I bought the policy in October of 2003. October 2013, I was working at New York Life Insurance Company. I started there in February of 13. I get a notice from Prudential. So my premium, it was a $3 million policy now that I remember, because my premium every year was $5,000. That's where the 5 comes in. I got a notice in October of 2013 telling me if I wanted to continue my policy for the next year, the premium that I would have to pay was $36,000. It went from $5,000 for each of the previous 10 years to $36,000 just for the next year. What the hell? So I balled that up, threw it in the trash, and became uninsured at that point. Why does that happen? Term insurance locks in the premium for a set number of years. That is the set number of years that the insurance company is willing to base its actuarial charts on all of the underwriting information, blood and urine, medical records, motor vehicle reports, everything that it received about you. It has a price that it will insure them for 5 years, 10 years, 20 years, 30 years. Here's what we'll charge per month, per year. Once we get outside of that range that we've underwritten for, we don't know what's going on with this cat. So we're going to charge such a ridiculous amount that it's going to force him to come back and go through underwriting again to get a more reasonable quote. So that going up 7 times was logical. But I didn't realize that if I had $36,000 and the desire to pay it, I could have wrote them a check and kept my insurance. The fact that it was a 10-year term policy meant nothing. It just meant that that price was locked in for 10 years, not that my insurance went away. It is a law that if you are willing to pay the agreed upon premium, once you've been issued insurance, your insurance company cannot stop insuring you. They can, however, raise the premium in certain situations. And one of them is outside of your term. That's where permanent insurance has an advantage. Permanent insurance quotes you a cost for the insurance that's in perpetuity. Perpetuity means it never stops being that. It's always going to be the same rate. Now let's think about this. Let's be logical people here at Wealth Our Way on 15 Minutes of Finance. If I offered you a 10-year term life insurance policy, or I offered you a policy that will go on for the next 100 years, which one do you think should cost more money per month? I'll wait. Of course, it should be the one that goes on forever. Go back to the example that I gave you about my own insurance. We get less healthy as years pass. So an insurance company that's still on the hook for insuring me at age 71, they need more money than an insurance company that's only on the hook for insuring me for the next 10 years. As a result, permanent insurance costs a lot more premium-wise than term insurance. But I like to look at that premium as an investment. Now, I'm very careful here at Wealth Our Way because there's a difference between investments and savings. When you invest in yourself, when you invest against certain negative things happening in your life, that's different from a stock market investment. So let's share a screen and let's take a look at the difference between term and permanent insurance. And in this case, like I said, they're going to talk whole life. So the first thing you need to know is that term insurance is straight death benefit insurance, whereas whole life is part death benefit, part cash value. Universal life has cash value, whole life has cash value. Where does this cash value come from? In a whole life policy, the cash value comes from a portion of your premium along with a dividend that the insurance company credits to your savings account. In a universal life product, it comes from either one of three ways. If it's a straight traditional universal life policy, it comes from an agreed upon crediting interest rate from the company. They may say 2%, 3%. That's what they're going to credit your savings account. If it's an indexed universal life insurance policy, they will credit your savings account with the result of however the index grew over the time frame they chose to manage it. Very confusing. We'll go deeper into it when we deal with the webinar. But for now, you can just know index universal life credits your savings account with the result of the underlying index. Lastly, variable universal life. This is one that is an actual investment. They take your premium, put some of the money in the stock market, in mutual funds and such, and whatever the return is, credits or takes away from your savings account. So there's a savings component, a growing component in permanent insurance. There is just straight insurance on term insurance. The other thing is that these benefits, how long they last. Term insurance is set to be priced for a certain number of years, whereas permanent insurance is set to last forever. However, you gotta love the financial services industry. They make variations to each of these things. In term insurance, they make it so that you can pay forever, as I just explained to you. And in whole life or universal life products, they make it so that the premium can end at a certain age. They have products called limited pay whole life insurance or adjustable premium variable life insurance. So there's never a set amount, which is why I do know, and I run a program where I want people to be involved in their own financial planning and do some research on their own. But this is very, very dicey stuff. And more often than not, it helps to have a professional with you. When you look at the pros and cons of the term versus the whole, it says in the pros that generally term insurance has a much lower cost than other types of insurance, and it's normally simpler to understand. But the cons of term insurance is that the protection, see, this is where Investopedia, I'm going to say, has it wrong. The protection is not only available for the term of the policy, because whatever term they gave you, you heard it here from Big Tank, you can keep paying it if you're willing to pay this outlandishly increased premium. And it says it cannot be used as a wealth building or tax planning strategy. I disagree with that a little bit as well. It's not as reliable. If I bought a 30-year term policy because I'm a 50-year-old man, that takes me to age 80, well, 81 because I'm 51. I'm heavy set, I'm Black. So statistically, I probably shouldn't live past my 70s. I might make a bet that 30-year term insurance will cover me by the time I pass away. If I'm wrong and I get to be 80 something and still be alive, then I have to shift my planning. But I could fund my tax savings plan with a cheaper policy. This is all something that we'll get into in the webinar. For whole life insurance, pros and cons. The pros are with whole life, you can borrow against it. You can take loans that are generally tax-free. You can lock your premiums in for life. The cons are it's much pricier comparable to term. And if you lapse, you have huge surrender charges and you don't get your money back. And outstanding loans do reduce your death benefit. So that's the genesis of the difference between whole life or permanent insurance and term insurance. As I say, 15 minutes of finance cannot do this justice to cover this topic, which is why I've dedicated the anniversary webinar and the webinar for our IRA contest to be all things life insurance. I'm also going to teach the best way to purchase term insurance to reduce your cost by 30% or more, saving you a bunch of money, making sure your family's provided for. So I'm so glad you attended. Can't wait to see you Monday, where we talk about last week's challenge of having a week-long budget. Have a great weekend. And remember, here at Wealth Our Way, our motto is wealth is not only for the wealthy. Take care and have a great weekend. See you Monday.